Hi, I'm Julie and this channel's Happy on Monday. In this video, I'm going to explain how reverse mortgages may work well for some people in some situations. Reverse mortgages have come a long way since they started in the 60s. Reverse mortgages may work well in some situations, but they're definitely not right for everyone. Under the right conditions, a reverse mortgage can be a great tool for long-term financial stability in retirement. One of my very best friends and her husband went this route, and I think it's working well for them. I like to think that it's an option for me in the future if I end up needing it. Reverse mortgages are definitely better than they used to be. A reverse mortgage is a loan for homeowners who are 62 or older who want to borrow against their home equity without having to make monthly payments. This can help seniors who are short on funds for living expenses. It can also benefit those who want more sources for retirement income and protect against risks such as market downturns or outliving your savings. I like to think of it as an option if my retirement savings start to dwindle. There are a number of fees. The most significant of these is the origination fees. There's also closing costs and mortgage insurance premiums, along with the interest the borrower accumulates on the loan balance. Taking out a reverse mortgage means spending a significant part of your home equity on loan fees and interest. Also, the loan terms can put you at risk of losing money and a place to live. A reverse mortgage can be a valuable tool for seniors who understand how these loans work and have a plan for how they'll use their equity. One reason this loan might be a good idea is if you don't plan on moving anytime soon. You should plan on staying in your home for quite a while if you're considering a reverse mortgage. The reason? Loan closing costs. It might not make financial sense to pay these fees if you're going to move before the loan's financial benefits outweigh the costs. Moving is one of the events that makes the mortgage due and payable. After paying seller fees and repaying your loan, the proceeds from selling your house may not be enough to support your next step, whether it's downsizing, assisted living, or paying for caregiving. Any borrower for a reverse mortgage must be 62 years old. If you're married and your spouse is not yet 62, a reverse mortgage may not be ideal. Though new laws may protect your non-borrowing spouse from losing the home if you die first, the non-borrower can't get any more money from the loan after the borrower dies. That means no more credit draws or monthly payments, so the surviving spouse might lose an important source of income. But if you and your spouse are both 62 years or older and you're both on the title to the house, getting a reverse mortgage together may be a good choice. Keeping up with homeowners insurances, property taxes, and home maintenance is essential if you go with a reverse mortgage. If you fall behind, the lender can declare the loan due and payable. If you don't pay your property taxes, the county tax authorities can place a lien on your home, take possession, and sell it to get the taxes owed. Uh-oh. There are some places that offer property tax deferral and home repair assistance programs to help homeowners age 65 and older. In addition, some homeowners insurance companies may offer premium discounts to retirees. Good to know. Some homes have sentimental value. If your house has been in your family for generations, your children might want to keep it that way. While there are ways for family to pay off a reverse mortgage, to keep the house, the loan does complicate things. If your home is just an asset, though, then using it for a more comfortable retirement might be the best way to use it. To qualify for a reverse mortgage, you must either own the home outright or have at least 50% equity. You need to have enough equity that a reverse mortgage will leave you with a big enough lump sum monthly payment or line of credit after paying off your existing mortgage balance if you still have one. Getting quotes from at least 3 lenders and going through reverse mortgage counseling will tell you whether you have enough equity and how much you could borrow with each reverse mortgage payment option. I'm including a link below for a reverse mortgage calculator just in case you're interested. Moving into a nursing home or assisted living facility for 12 consecutive months is considered a permanent move under reverse mortgage rules. Seniors often make unplanned moves for medical reasons. You need to be aware of that possibility. Reverse mortgages require borrowers to live in their home as their primary residence. In fact, borrowers have to certify in writing each year that they still live in the home to avoid foreclosure. When the last reverse mortgage borrower dies, the loan becomes due and payable. Heirs who want to keep the house will have the opportunity to pay off the reverse mortgage balance to the lender. If your heirs can't or don't repay the loan, the lender will sell the home to recoup what the borrower owed. Any positive balance between the sale and the loan balance goes to the borrower's estate. If there's a negative balance, Federal Housing Administration insurance covers it. With a negative balance, your heirs receive nothing, but they also don't owe anything. Homeowners who suddenly vacate the property generally have 6 months to repay the loan. And though you can pocket any sale proceeds above the balance, thousands of dollars in reverse mortgage costs will already have been paid out. If your loan balance exceeds your home's value and you can no longer stay in the home, you have a couple of choices. You can do a deed instead of foreclosure, or walk away and let the lender foreclose. Reverse mortgage loans are non-recourse, and their debt cannot transfer to the estate of your heirs. No matter what your situation is now, consider how it might change in the future. Will a reverse mortgage help you or hurt you in these scenarios? Reverse mortgages aren't an ideal financial decision for everyone. You may have other options, such as selling your home and downsizing. So in summary, reverse mortgages, particularly the line of credit type, can be helpful in some situations. They can provide a source of emergency funds or income diversification. They can help pay for in-home care and are a source of non-taxable income. Because the money's a loan, it won't increase your income tax or your Medicare premiums. Even though a reverse mortgage is an expensive option and not an ideal one, it may still be the best choice in some circumstances. Here are the ifs. If the proceeds from the loan will increase your financial stability, if you plan to stay in your home for many years, if you can afford the ongoing costs of home ownership, and if you don't plan to leave your home to anyone. For me personally, I like knowing that option is out there. If the market crashes or for some other reason I start running out of money in retirement, I know that I have that option. It would be a backup plan or a last choice for me, but at least it's a choice. It's nice to have options, and it's important to understand those options. If you've had experience with a reverse mortgage and you want to comment, let us know. How's it going for you, good or bad? We'd love to hear it. Thanks so much for joining me. If you found this helpful, please like, and if you're interested in early retirement, consider subscribing to my channel. I'm going to leave you with a quote. Don't wait for things to get better. Life will always be complicated. Learn to be happy right now, otherwise you'll run out of time. Hope to see you again soon.